I got the recording rolling. Um, so one of the biggest things that I want you guys to start to pay attention to is the higher time frame rules, of course, right? So you can see like this was the easiest and most relevant area of buy side, right? This was that previous weekly high from last week, and see how we're taking this, and we have like this huge, pretty strong rejection. Also, after filling in this daily bearish for value gap. So the reaction above your draw or in after your draw is taken is important. Like a lot of people will just see this in pattern trade and just blindly send calls on this, and of course it could work, but this is not what you want to see after having some sort of relevant level getting hit. So that's why I'm going to be patient, because this low could definitely be in and up for grabs, especially since that daily sell side pool is that weekly bullish fair value gap low, right? And this would be that weekly order block as well, aligning with price. And real quick, why would this be our weekly order block? Well, failure swing, failure swing, failure swing. Guys, look what I talked about, right? See how there's significant room between this low and this low? So you can expect, and we're also in the weekly time frame. So a lot of importance is weighted inside of this low. Look where we react to them. We have two of our last down close candles closed above. That's why I was expecting all-time high to come next before anything else. Before this low to be taken, unless some tariff whatever comes out, and in that case we couldn't help it. But this reaction is not bearish whatsoever. So that's why I expect all-time high eventually. Um, and so that's why I picked these two down close candles. And once again, what do we have? Look how large this down close body is. Yes, it's a weekly candle, but you can see how thick the candle body is. That's what you want to be seeing. So back to here, the reaction lower is no good for right now, but what I'll be looking for tomorrow is this 4-hour change in the state of delivery, and ideally it occurs on all assets. So actually, if we look at YM, I checked this earlier, since this SMT was held, or since this SMT was here, then this could be a valid change in the state of delivery, but you can see how far we've already retraced. So ideally, and look, not large candle bodies. So this isn't the best order block. And also, since the Dow is also the weakest asset, I wouldn't be trusting that. So I would need ES and NASDAQ to do the same thing. So I would need all of them to start to come back to, or not come back together, correlate again. So this is what I'll be looking for tomorrow, the 4-hour change in the state of delivery on both NQ and ES. And like I said, it's a Monday, so I always have lower expectations just going into the day. But this could be a valid reversal just because this is the last failure swing, right? Low here, low here, low here. Take it out. It's all fractal, so they are 4-hour liquidity pools, so it is important. And this is that same daily order block that we've respected so far. There. So that's literally as simple as it gets. If this gets closed above, then I'll be looking for 9:30 to do. I'll be looking for 9:30, and then of course that 10 a.m. news. I'll either enter prior and hold through the news, or I will wait for 10 a.m. depending on the open tomorrow. So it'd be of course the same kind of thing I always look for, just that higher time frame confirmation, and then the lower time frame risk to reward. But that's literally it for tomorrow, at least. And if this doesn't occur, then this low will be next, and then of course this low. So we could actually have a bearish week, especially since NFP likes to be a lot of the times the low or the high of the month. So if price does go lower and puts in some sort of low during Wednesday or Thursday, then that could be the low potentially the low of the month. Not always, so do not run away with that and just think you have some key to the market. Of course, it's not like that, but there is tendency, and you guys can go back if you're interested and look at that. Gotta ask, if that plays, are you alerting about it? I'll try to remember, but like I'm kind of new to this whole alerting my play thing, but if I do get in, I need to try and get better at alerting to you guys just because it's a lot easier to see or understand in real time. But I always put my own trading first, and because I'm not like I don't trade, I couldn't if I was to live completely on my own and pay for absolutely everything, I wouldn't be able to just off trading from where I'm at right now. Like I'm doing okay, but and I'm completely open about that because I'm never gonna lie to somebody for no reason. But yeah, I need to. I need to help you guys more. I'm definitely not no Swami, that's for sure. You guys have any questions? Well, it's kind of like I mean, always trading is a if then this scenario, but we're in a weird spot, right? We're kind of in no man's land. So I will definitely not be scurrying to my computer tomorrow and putting out a trade if it's not there. So really, I don't like this sharp rejection like we went over already. What would be a potential good entry point to look at? Well, I always enter ideally on the 3 to 5 minute time frame and or the 15. Ideally, I don't go over that, but it just depends on the risk to reward. There's never Sometimes I'll even take an hourly setup if I can, make the risk to reward make sense, but ideally it's the 5 minute. And so this is just a pattern trade because this isn't what you really want to be seeing, but this would kind of be what I would be looking at. So say this is like just pretend this is the 9:30 open tomorrow, and we have this drop lower, and just use the 15 minute just because that's a lot more realistic, right? So say this is at 9:30. Say we get a drop into a low, and then we get this. The candle close above. I would be waiting now, since obviously I'm not going to long here and then just put my stop all at the low. The risk to reward's not there, right? So I would wait for a tap into this, and if it never comes, then I don't trade, right? So I wait for a tap on my key level, then I would go to the 5 minute, and then I would need. I don't know if it's going to give me yeah, so in this case, like I would not obviously take this trade here, but if this looked a little bit better, then this is pretty much how my trade setup would look. So actually, does this even tap the key level yet? Oh, this is yeah, it does because that's the 15-minute high. So yeah, so this is pretty much it. So I would like wait for my key level to be hit. We close above the last opposing candle that took out a low and hit the key level, and then this would be the entry point, and then stop loss would be like down here, just because you don't want to see deep retracements, and then 2R or the external high. Like again, this is not a good example because this probably doesn't even work. Yeah, so it gaps down, but this is you guys. That's kind of how I frame my trade setup. Or I'll just take the 3 minute or the 5 minute, like this Friday example from here, because all the key levels are met, and you can either trust that this is gonna hold on the 5, which that's something I need to get better at, like this. So you can literally long here, and then your stop loss would be at the low of this fair value gap because you have an order block, a breaker, this down close candle, and also 2 5 minute fair value gaps. So your price should not retrace all the way down here. Ideally, it stays in the upper half, and you can see the candle bodies do. Uses the order block open, and then price goes higher. And if you miss this, then you can take the continuation entry, which is here. Price shouldn't break this low, and then you can catch the move. So this is obviously a good example here. This is something that I missed on Friday, but I was open about that. what if we inverse the 4-hour BISI? Um, yeah. So you would wait. Which? Hold on. Am I in replay mode still? Yeah, I am. Goodbye drawings. Which one? This one down here? Well, then that would be pretty obvious that price is heading down to this low. But we probably don't even need that. Um, if we, and also same kind of thing, we fail to get this close, right? Then to me, from this sweep of this high, and then this here, if we get a closer below here on the 4-hour, this could be a valid order block. But ideally, we don't. It also depends on how we react at this level too. If we just hit this and then snap back and there's a large wick, same kind of thing. Because a lot of people overlook the reaction at the key level, and that's something I want you guys to go just think about when you're looking at the marketplace today. So this could be a valid order block, bearish order block into these lows. So I'm open at both sides, and ideally I did want lower into this weekly fair value gap. So we'll see, right? I don't have a scope into the future, of course. But YM has the SMT. So if YM now starts to close below, then this to me would be a trusted order block, especially since YM, the strongest asset, has failure swings below, and also still wants that weekly or daily sell side pull, weekly fair value gap, etc. So we'll see. A more bearish bias, we're at a premium. Yeah, we're very high up in the range, so definitely could see. But that's what I'm saying. Like, just stay patient, and that's what I will be doing going into the week. You need to allow time to kind of do its thing. I missed on Friday too. I was locked out to stop. Nice order block reaction to 1 minute once we reach 4-hour fair value gap. Yeah. It's more it's that's what I want you guys to not overlook. It's not about the 4-hour fair value gap. Like, yes, this is important, but it's the low that's triggering this move back up. It's this low getting hit. Because even if price would have just taken, so same thing, right? Imagine if price would have just hit this low instead of this one and then showed that exact setup. I'm not taking it personally because I'm trading away from a failure swing. I do not trade away from failure swings. I've been clapped up too many times. Yeah. Yeah, exactly. So you see what I mean? It's not just about the 4-hour fair value gap. And I know you know that, SW. I'm talking about more people who are newer to ICT concepts because it's tricky. But it's not just about one thing. It's not just about hitting. Just because you hit a daily fair value gap doesn't mean you want to be sending calls into the next external high, right? That's what I had a lot of trouble with when I first started too. That's why I try to always repeat the same thing so people understand. Any questions, guys? Feel free to ask whatever. Please don't feel like you have a dumb question. I don't care how new you are. I don't care if you ask me what a fair value gap is. I don't care if you ask me to explain whatever you think is stupid. Feel free to ask. Yeah, exactly, bro. I used to do the same thing. I used to see a higher time frame for value gap get hit, and then I used to take 1 minute break of structures and quotation marks, and then 1 minute fair value gaps in any direction. Just got slammed over and over. Can you explain what a propulsion block is and the significance of it? So that's what this was on here. So the significance of it, let's answer it in two parts. Or we'll do the what it is. All a propulsion block is another order block that was created off of the order block. So this is that same down close candle. Boom. This down close candle is now valid to support price. And it's not just this candle, right? this low is the invalidation point. The low is considered where you're invalidation, not just the candle body, right? Or the low of this down close candle. But it's valid because we rebalanced the 4-hour fair value gap. And it's created off of this, right? So now, whenever we close above in bullish prices, this would be your reversal signature here. This is your continuation signature. When another opposing candle gets closed above, now this low should be protected until your draw is hit. And the propulsion block will often give you the explosive entry or the explosive move to the highs, like this. See the difference between this price action here, up, and then here? Big difference. Just orders being slammed. Yeah, I mean, however you want to look at it, right? Like, I'm one of those people who, like, I know JP Morgan isn't trading order blocks, right? I just know that the concepts work and they play out every single day almost at the same times. So I'm not one of those people who like am convinced that ICT made the algorithm for all the banks. Yeah, exactly. No, I mean you can go down some serious ICT rabbit hole, bro. And some people are lost in the sauce. Any other questions? I don't want to keep anybody too long. It's Sunday night. Enjoy the time with your friends, family, yourself, whoever. I'll stay here for a few more minutes. Check NASDAQ real quick right now. Is it good for longs? Check 1 minute, 15-minute order block. Landon, bro. I'm not even going to do that. I do not advocate for trading the Sunday an hour and 20, 40 minutes into the open before a high impact news on Monday. Yeah. It's a psychology question, but how do you make the shift from impulsively taking trades to being more disciplined instead of following rules? Bro, Chanko, I feel like I forget about concepts in the moment. So I'm very open about it. And I'm still not completely great at it. The only reason that it's taken me so long to get where I'm at now is because I was unable to just do nothing when I needed to. So, and I can help you with this because I've just started to understand it. It's literally the simple fact of, are you demanding your setup every time that you sit in front of the marketplace? And to me, when I get in front of the charts and I don't see my setup, you have to give yourself this reality check to be like, am I putting on a trade that I would be completely okay with losing? You need to have like this little checklist that you can remember. And then the second question that I always ask to myself is, am I just getting into this trade because I want to make money, or is my system being demanded? Because if your system is being demanded and it's showing in the charts and you're not hitting the button, there's a disconnect between your psychology, your trust in yourself, and your skill set. So this thing that I have, I can send it in here. Let me find it. For this, my pre-market psychology prep is I have a few questions for myself. It says, are you completely okay with the risk you are about to put on? The second question is, have you accepted that the only guaranteed outcome in trading is losing? Accept that your mind is trying to protect you from fear. You have to be okay sitting there in discomfort. Because a lot of people whenever they do find themselves in a winning position, they are fearful that they're going to lose their profits. But when they're in a losing position, they're hopeful that they're not going to lose their whatever they're risking. So it needs to be the opposite. You cannot be an outcome-based trader. Everything needs to be process-oriented and mechanical. You should be showing up, demanding what you look for in the chart, hitting the button whether it's based off of logic, and if it's not, then you should be doing absolutely nothing. You have to accept the uncertainty of each trade, and you have to get to a point where the outcome is no longer dependent on whether you feel joy or sadness. There should be zero. You shouldn't be happy when you win or lose. Like, you can celebrate at the end of your week, right? Do something for your parents or your loved one or your spouse or your child. Do something that makes you joyful. Celebrate your small wins. Nobody's telling you not to do that. But don't get, like, if you lose a trade and it ruins your entire day, there's something completely wrong. But I hope that little bit of a long-winded answer helped you. Okay, cool. Yeah, no problem. Anybody else? One more minute. Have anybody else crank out some questions? Thank you. No problem, Nick. I'm going to end the recording there.